Alright, what's up, ladies and gentlemen? Welcome back to the channel. Welcome back to the channel. My name is Deontay Long, and my channel is called The Trucking Trader because I am a truck driver. Obviously, it's called The Trucking Trader. I mean, some people may not get it. You never know. So, may have to break that down to some people, but I'm just a working class guy, that trying to make my way up to the top, trying to make my way into some freedom, so I don't have to always have to work, and drive all around the world just to make money and, pay the bills, right? So one thing that I do to accomplish these goals is I trade, right? I invest, I look at the markets. I've been doing this for 7 years now, right? So just to give y'all a quick little backstory, I also need to make sure that everything is correct before I get too deep in this video, because it seems like I just can't do nothing right today, y'all. Right? If this video is not working right this time, I don't know what I'm gonna do. Seems like everything is going good, at least on YouTube. Let me check Facebook. Make sure my people over there on the Facebook side can hear me. All right, you guys, so let's get into this video. So this video, we're going to be looking at, we are going to be looking at the micro E-mini NASDAQ futures, right? This future chart. All right, I can pull the all right. Just getting everything going, you guys. I'm still pretty much new to having a PC, so I'm trying to make sure everything look good on both ends while I'm doing this. All right. So this is pretty much my chart right here. Right, we're on a 1 minute chart. So today is Monday, and it's about, let me see, let me make sure I turn my clock widget on right there, right? It's about 3:30 in the morning. So the quickest way to find your new week opening gap is going to be go to this 1 minute chart, right? You have to go to the 1 minute chart. You do not have to be in regular trading hours. So many people get that confused because that's how you find the opening range gap, right? The opening range gap is regular trading hours. The new week opening gap, you have to be in electronic trading hours, right? Then we're going to go box this up. So this is what I typically start to do whenever my chart starts to look too crowded like this, because I've had this open range gap on my chart for quite some time, I will just remove this. If I can click on it. See, I have so much on here, I can't even click on it. So I'm going to remove this. And then I'm going to box this up, right? And I like to make my opening range gaps. I like to make my new week opening gaps purple. And then I label it. And then I put the date on there. So this one would be, I think today is the 19th, or maybe it's the 20th. I have to go check. And that's all I do, right? I pretty much lock that up, make sure I got everything as close as possible. Don't really have to be perfect, but most of mine I like to make them as perfect as it can be. Right, so you got to make sure it's the close of this candle. So put it on top. That's a green candle, right? Because it's a green candle, you're going to put it on top of the body when you're putting your new week opening gap on here, just like that. And then because it gapped down, right, this candle opened right here. So you want to put this body, you want to put the bottom of this gap, right? You want to box this up and you want to put it at the top of this body, right? And that's going to be your new week opening gap right there. So now that you have that labeled, you can lock that on your chart and leave it on there for weeks at a time, right? Because you guys can already see this is what moves the markets, right? Even on when the market creates these smaller new week opening gaps, right? You guys can see how the market is just bouncing from one PD array to the next, right? We have our new day opening gap on here. We have our first presented fair value gap on here, right? So the market just opened for the London session, and if we was one of those maniac type of traders who just want to trade everything and take every little move, we could have possibly done that, right? Using this type of price action to give us an idea of what's actually going on in the market. Now, me personally, I'm not doing that, right? I just got funded with FTMO, right? Just got funded with FTMO. Make sure y'all drop a like, show some love, because the reality is it's not that hard to get funded. It's not that hard to get funded. It's really not that hard to get a payout. It's just you have to have some patience. And that's something that most of us just do not have, right? So after I pretty much do that, I don't really trade London, but if I was to trade London, I guess I'll give y'all a nice little London session course. So the London session has its own fair value gaps. We can use the midnight, right? So the midnight opening price is a very significant price. So we have to find that as well. We can go to the 1 hour chart. That's the fastest way to find the midnight opening price. If I was to trade the London, this is what I would do. Right, so here's our midnight opening candle right here. Because it's a green candle, that means the body opened at the bottom, right? It opened here. It made an all-time low, right? Because this is a 1 hour candle right now. So it opened here, made an all-time low, made an all-time high up here where this wick is at, and then the body closed up here, right? But this is our opening price. So if I'm going to go label the midnight opening price, I'm going to go label it like this. Try not to cough in my mic right there. All right. So this is how I label my midnight opening price. Put a date on there so I can use it for, study purposes. To learn, how long do these midnight opening prices work, right? So I would have done that. Then I would have dropped back down into the 1 minute time frame. Right, obviously I'm a little late for the London session, but that don't mean you still can't, come out here and learn something if that's what you want to do, right? So we're going to use this. We're going to use this vertical line right here so I can know where my midnight open was at. Because remember, I'm going to give y'all a quick lesson right here. Right, so this is our midnight open. The very next candle after that, we're going to be looking for our first presented fair value gap. Right, so it's never the actual midnight. It have to be 12:01 and after. So if I'm right, I believe it'll be like this. And because there's a gap right here and a gap right here, let me zoom in for you guys. You ladies and gents. Right? First, let me take this back off. You see this little gap right there? You have to gap all of that up when you boxing these, when you're using any gap, right? If you're going to use a first presented fair value gap, it has to be boxed like that. I like to make mine sky blue. I probably won't keep this one. I mostly only keep the first presented fair value gaps from I mostly only keep the first presented fair value gaps from the London session. All right, and then you can just label this. And I know I said London session, but what I actually meant was I only really keep the first presented fair value gaps from the New York session on my chart. I don't, but this is like if you was trying to trade the London session, right? This is what I would do, right? But this year I'm not really trading London. My goal is to like really be disciplined. I'm only trading the New York session this year. So if you're going to try to trade the London session, you're going to try to trade in between 3 a.m. right? Some people say 2, right? And some people say it starts at 2 a.m. You can start looking for a trade pretty much anywhere between 2 to 5 p.m. This is why I say I started to scream late, you know. So this is your window to pretty much find a trade. It's in here. So you can see like pre-market, right? You can see like pre-market from midnight to 2. Consider this to be like pre-market for London. You see how it created this market structure right here on a 1-minute time frame? And then on a 1-minute time frame, you know, price built out this liquidity down here, and then we seen that, you know, we had a move going down like that to sweep out all of that liquidity. Right? So, I mean, the only thing you can do now, if you was going to try to take a trade for London, is potentially, you know, mark out this range like this on a 1-minute time frame. Right? If I go on a 5-minute time frame, see how it looks on a 5-minute? So, you know, the trade actually looked like it's getting ready to come up. But this right here, this is a order block. Right? This little bubble right here, this little red candle on the 5-minute chart, this is an order block. So we have our range. We have our swing low on the 5-minute chart. Then we have our swing high. And then we can box this little order block up right here. Just for study purposes, you know. The price could fall right through this order block. But we're going to box this up. It's in a discounted zone. Price is actually coming down right now to sweep some liquidity on the 1-minute time frame. Let me go back right here, show you guys how that look, right? See, we have these little lows down here. But if we're going to remain bullish and keep going higher, maybe price comes down here, gives people a chance to buy, and then goes back up there and sweep that liquidity, right? That could be like a trade idea for London session. Right, and then we can use our little box to see our risk to reward ratio. So like, let's say if we was going to use this order block, I wouldn't really jam my stop loss up this high if I was going to take this trade. You know, I would have to have a really good stop loss. So I will use a stop loss from like the 1-minute time frame. You know, this isn't going to be a breakaway gap because price is already coming down. So I know price isn't going to respect this as a breakaway gap. At least right now, I don't believe it will. You know, maybe price was just going to sweep this liquidity right here on the 1-minute, right? This little liquidity right here, and then keep going. That could have been a possibility. Like maybe if this was a New York session, I would have trusted something like that. But because this is London, I don't really know what's going to happen. And I would prefer to price for, you know, I want to see what's going to happen when we get around here at this order block, right? Because if I had a stop loss like maybe all the way down here, that's still a 3-to-1 risk to reward ratio. But the thing is, you know, trades like this, you don't really want to rush them. You don't really want to rush too fast and try to get in there. just gave y'all a nice little master class right there on, price action and how to find trades using the first presented fair value gap for, the London session. Right, we got our midnight opening price right here. Price just dipped below that one, so this is going to help tell us if we're still bullish or not. If we're still bullish, price should have just dipped below this midnight opening price and then start to come back up. But like I told you guys, I would have wanted to see price hit this order block right here at the bare minimum. Otherwise, you could get faked out. You can really get faked out in a trade like this because, because this is also a trade idea right here. Oh wait, I got the wrong box on there. All right, so this could be a trade idea. Somebody could be selling right now, and that's almost a 1 or 4 right there. So, because this right here is a sweep of liquidity on the 1 minute. Right, we swept liquidity, had a little shift right there. Yep, see? Let's see what happened, man. Let's see if I'm right here. If I'm right about this, I think I'm just gonna end the stream, y'all. Uh-oh, is my stop loss gonna get hit? Let's see. A trade like this, if I was to take this trade on a prop firm account, I would probably only risk like maybe $100 on like a 100K account. So if I had a 100K account, I would risk like $100 to make $300. So that way, even if I did lose, it really wouldn't matter. But as I told you guys, I am not trading the London session this year. I'm not even trading the evening session for the New York session. I'm just trading one session all year round. That's going to be the morning session. If I can't find my trade during the morning session, I am done. All right, let's see what happened. Like if I would have taken this trade, I would have been in a little bit of profits right here. This is the slowest trade of all time, though. I would have just wanted to just get stopped out already at this point. Another reason why I said, I'm not trading London session. But if this isn't a breakaway gap, the sell could still work. This would be a safer stop loss, but it don't really give you the same risk to reward. But I would have rather had used this stop loss because if it goes all the way up there, then I don't want to be in a trade anyways, right? So for me, I would have just risked something really small amount. So, but even when you risk like small amounts and you're trading the London session, those can still add up too. You know, you could take 3 or 4 trades in a row before you know it. Like if you risk $100 here, $100 there, you can be down almost like a half of a percent within one session. You know, so that's why I don't really like to trade the London session anymore. It's just too inconsistent for me. Like it moves way too slow. You know, me, I like to like trade within the 2 hour period. You know, try to find maybe one trade that like really can hit one really good trade, or sometimes I might try to find like 2 trades and then I'm done. Right? If I can make a half of a percent or like even just 1%, I'm pretty much good to go. You know, now, because at the end of the day, you guys, you got to remember, most people aren't beating the market. So if you can start your day off with a win, why not just take that win and keep going and just move on, right? A lot of people can trade really well. But the problem is, it's like, you know, they try to beat the market up too much. Right, so let's see. Okay, you would have got stopped out on this trade idea. Now let's see if you would have used a safe stop loss, if the trade idea would have worked. Let's see. You know, this is how I pretty much learn how to trade. You know, you have to do some hypothetical trades from time to time. Right? Do some hypothetical trades, save the capital. Even if it's the prop firm money, man, save it. Because this is way less stressful just sitting here learning versus like trying to actually, you know, beat your phase 1 or beat your phase 2. It's not even worth it. And the reason why I say it's not worth it is because, as I already explained to you guys, this right here could have been acting as a breakaway gap. All right, we already swept liquidity. All right, remember I said over here, all right, we swept all of that liquidity coming down. The market started to make some bullish price structure. All right, we swept this liquidity right here. And now, you know, we could just keep going up top, but price don't really look that strong either. It don't look weak, but it don't look that strong. So we measured out our range. What we're waiting for is price to come in a discount range. So even this trade right here, that's why I was giving you a hypothetical trade. But if I'm going to buy, right, I want to be on the right side of the market. We have some equal highs on a 1 minute time frame up here. So we know this is going to be our liquidity, but we just don't know how long the market is going to bounce around and sweep some of this, you know, short-term liquidity before it does its job up here. gonna see. See this hypothetical trade, and this is another reason why you do not counter trend. Do not counter trend trades. Right? As soon as you see all of this bullish price action after a sweep of liquidity, do not try to, take a small trade going in the opposite direction, because even if you're right, it's going to just be stressful. But like I said, that's why I would have had my, original stop loss right here. So if I get stopped, I know I'm on the wrong side, and don't do that again, right? But sometimes, I'm not gonna lie, if I do risk $100, I give myself room to move my stop loss. So let's say if I move it up here, maybe I'm right on the trade, but I just took an early entry, right? You can do something like that, and then your risk will go from like maybe $100 to, 200, or maybe 100 to 150, depending on the risk. And then you can save your trade, right? So that's another technique when it comes to like, passing challenges and executing good trades. Like, a lot of you are thinking that, you're putting yourself in a situation where like, I'm risking 1% on the trade, but then you go in with the full 1%. That's not always the best idea, because, then you could lose that 1% really fast. Start trying to put yourself in a situation to where you're risking $100 on a 100K account, but you're going for like a 3-to-1 risk to reward ratio. That gives you some time to let, choppiness play out. Whenever you can't predict when the market is just going to start being choppy. Right? Like it was doing all of this. It was moving fast, had everybody excited. Now it's not really doing nothing, right? And if you took in a buy down here, you're in down draw, right? So I just wanted to have this hypothetical trade on my chart right now, so I can see, if it works, if it don't work. So it's now 4 a.m. and this is the London session, you guys. This is what I had to give up. I had to give this up right here, because it's just not worth it for me. I used to be the trader that got caught on a 1-minute time frame a lot, and then I also got caught on a 1-minute time frame during times, right, trading sessions where I knew I should have never been trading in the first place. But this is also why you have to, always have a good stop loss, right? Because even on this smaller range that I just measured out right here, from swing high to swing low, right? This is a range right here. You see the top of this range is where this fair value gap is at. All right, I'm just trying to give y'all a lesson. All right, now this is why you have to learn how to use ranges correctly, right? And use your Fibonacci tool correctly, right? Because now, look at this trade idea. If you would have just waited until it got inside of the premium zone, right? Because if you're looking to sell, you're looking to sell at a premium, right? So if you would have had your entry up there, right, it's still almost a 3-to-1 risk to reward. You could have got in right there. You would have been floating in some profits, right? So I guess in these markets, maybe you could still trade them, but you can't use the same techniques as, you're probably going to use in the New York session. Because now look, it's giving you the drop off, right? So that's why, I was saying risking, if you have a trade idea, make sure you're risking the right amount, right? Make sure you're using the proper stop loss. Because, I was honest with you guys. I told you I would have had my stop down there and I would have been stopped out and I would have got faked out. But if you use the proper stop that ICT tell you to use, right? Make sure that you're aware of your swing lows and swing highs, right? So you can always have a range. Now the market is targeting this liquidity right here. And now we could possibly go back into this range that we was talking about on a 5-minute time frame. So, let's see. We don't know just yet. But if you guys go back in the video, you will see that I told you guys, there's 2 trade ideas for the rest of this London session, right? We was taking a hypothetical trade. So I said, hey, this is something that, I would possibly do if I was like trading inside of this market. So I hope you guys learned something right there, because this is almost a 3-to-1 risk to reward ratio on the trade idea. And it looked like they're going to give us at least this liquidity that we're pointing to right here. We just swiped that. Now, if I'm trailing my stop loss, right? If I'm trailing my stop loss on this trade, I will have to move like my stop right here. Right, I'm gonna make this yellow so y'all can see that. So I will have to move my stop loss right there for now. And if I'm still trying to target the midpoint of this box, right? Price we just broke below, right? We just broke below here. I will have my stop loss pending like this, right? This candle right here is very important. Crap. Let's see if I can get that back on there. Let me lock this on there. Okay, let me make sure y'all can see that, right? So I would have moved my stop loss right here. It would have been pending right here. I would have waited for this candle to close. This candle needs to close really bearish for me. Right, we're looking to get out right here at the midpoint of this order block that we was talking about on the 5-minute time frame. Let me go back, show you guys what we're looking at on the 5-minute time frame. Right, now we're on the 5-minute. This is the 5-minute order block. All right, let me point my arrow to this so you guys can see it. Let me try to widen this out so you guys can see that. All right, so on the 1-minute time frame, this closed like a bearish pin bar. All right, we still have a pending stop loss. You see this little gap right here? We want this to be kind of like another breakaway gap. So for me, it would have still been pending. And then about right here, I would have confirmed it. So my stop loss would have had to be moved right there. And win or lose, you got to protect that trade right there. But price should, from here, it should go directly down to the midpoint of this order block. All right, and if it hit this yellow line, we're going to be stopped out for profits. Remember, you guys, this is all a hypothetical trade I'm just doing just for learning purposes. Right? Notice how on a 1-minute time frame, we got a nice 1-minute candle that closed. Look how it closed below this swing low right here. So that's a good, indicator that we should definitely be hitting the midpoint. Right? And right here, I will move my stop loss one more time again. Confirm it, boom, my TP would have already been hit either way it go. That's how that trade would have worked, you guys. Now I already know there's going to be somebody out there that's going to say, well, why didn't you take the trade? And I guarantee you that person is probably not going to, they're not really a profitable trader. I can almost guarantee it. I already told you guys I'm not trading the London session. I'm only trading New York session. But I said for the sake of making a good video, I'll give y'all a hypothetical trade that you could have taken during the London session. Go back, watch the video, learn something. All right? That's all you got to do. It's not that hard. You don't have to come over here and say, oh, I'm faking it. I'm faking the payout. Or I'm doing some weird shit. I don't know. Everybody is so cynical these days. It's cool, but come on now. I'm trying to help people get money. Trying to help people get money, right? And then if you want to get super greedy, all right, I told y'all, just to finish out the video, I go back in the video, I said it could possibly breeze through this stop loss if it was to come down. Go back in the video and watch it. Right? But then you can look for a buy. But when you're looking for this buy, you got to be real patient. You have to use a really good stop loss if you're going to try to take the trade early. And then this can be another 3-to-1 trade that you could possibly take. So you caught it on the way down, right? You have to wait for the market to build some liquidity. You can see it on the 5-minute. The market built this liquidity just to take it. All right, so we can remove this box right here. All right, you can see it on the 1-minute. The market was building this liquidity just to come and take it, right? It may even want to go take these, pieces of liquidity out as well, right? So, what you want to see, because overall, on the 5-minute chart, we're still bullish. We just came into a discount zone on the 5-minute. We swept some liquidity. Now you want to see, is price going to want to start breaking back up, right? When you're taking these type of trades, the best thing to do is wait for, confirmation on a 1-minute time frame. You want to see one of these 1-minute candles really get, start to whip back up there. That may mess up your risk to reward ratio. You might end up being in right there. But at the end of the day, let's say you did take that trade. If you just almost got a 1 to 3 during the London session, you should be done, right? Realistically. So if you're still trying to sit there and take more trades and you're going to sell 1 minute and then buy the next minute, you're not going to have a really good profit factor if you start doing all of that, right? So the market instantly kept going down, and this is why I said, I'm not trading London session, right? But just for learning purposes, we're sweeping this liquidity right here, we're sweeping this liquidity. That's why we have our stop loss all the way down here. If you're going to start looking for a buy, even buying right now would be the best time to buy, honestly, because now you have a 1 to 10 risk to reward ratio. So if you took that first sale and you made a 1 to 3, if you was going to take another entry, which I don't advise you doing that, but let's say you did, only risk another $100 right here, so that if you lose this trade, right, maybe because of stop loss placement or maybe because the market just want to keep going down, right, you're still in the profits for this London session, right? It's all about accumulating and building up an account, right? That's what we're trying to do, right? But you can see I would have been stopped out on that buy, so. But, and then right there, you can go back and use this little order block right here for learning purposes. Why didn't it work, right? Right, and the answer to that question is, it's because liquidity typically trumps everything, right? So all of these little swing lows that was in here on the 5-minute and the 1-minute time frame, the market wanted to take that, right? The market doesn't care about that 5-minute order block, right? That's why we use PD arrays from the higher time frame, right? We would have been using this new day opening gap. So if you're going to try to be taking a buy, your stop loss will have to look like this, right? At least like this. And you're banking on the fact that the market is likely not going to want to take this swing low, right? But all of this price action, I wouldn't want to be against this price action. But I'm just saying, this, at least if you're going to try to form a trade, make sure that your risk to reward targets are always really big targets, right? And then you have to be able to use the right PD arrays as well to make sure that you have the right stop losses. Because a lot of you guys get lost up in there thinking that, these little order blocks right here is going to hold up, You may see the price bounce up one time after hitting this little, right? You may see the price bounce up right here after hitting these two order blocks. But it's going to always look to take liquidity, right? It's going to always look to take liquidity, you guys. So always remember that. But, if you really focus on like your risk to reward, regardless of what happened, you will be able to manage your prop firm account. Right. So based on the idea that I just told you guys, we know that the market wants to seek liquidity. We know that London session is going to have a small range, right? So where is the liquidity at now? Right, we got all of these equal highs up here. Right, we got all of these equal highs up there. That's where the liquidity is going to be at. The market is starting to have some trouble. If we go back to the 1 minute chart, because now we're on the 2 minute chart. So that would have been pretty much that London session right there for me, man. It's 419. So I'm going to go look at some other charts. Oh, look. Well, we would have been stopped out again right there. So if you would have made the 1 to 3 on that first trade, and then if you would have kept trading, you would have gave back, maybe another 200. So that's why you got to be done. No matter what trade session you're trading, if you can get a good win on your first idea, take it and just walk away. Do not try to get too fancy in the market. Let's see what we can look at. I guess the market said we sweeping all of this liquidity, right? Now let's see, since we was wrong, let's see if we finally got the full sweep of liquidity. Let's see what's going to happen right here. Are we going to start the reverse or are we going to continue? Me personally, once I would have looked at that 5 minute chart, right? Breakaway gap, breakaway gap. I can't trust taking a buy, right? So, very small range right here. This is like what, 40, 50, 60 point range, something like that. I don't know. I want to look at the cost of some other things. Uranium. Man, how do you buy uranium? I want to go buy some uranium. I think I want to buy some. Wait, is this gasoline? I'm trying to find uranium. Oh man, I thought uranium was cheap, y'all. For a second, I almost lost it. I'm like, $1 for uranium? I'm about to buy 1,000,000 of these. Uranium is almost 7,000. My gosh, this chart is breaking out so aggressively. This chart on a monthly time frame, it is gone. The 10x right there. Yeah, uranium looking like it's ready to double up. That's the monthly time frame. Let's go to the weekly. Yeah, this chart is crazy. The weekly. Oh, I want to see something like this. Well, it's too expensive for me anyways. I don't got uranium type of money, but let's see what copper is doing. I'm so glad we got out of Zcash. I'm so glad we got out of Zcash, man. But we got in at 50. We got in at 50 and rolled it up all the way to 700. We got out at pretty much like 650. So we took it from $50 to 650. And then we held all through the dip, and then we sold the rest of our position when it was like at 480. So we had a pretty good average, somewhere around like 500 was our average, mid 500. So we got a good 10x on our money. But you know me, I don't trust anything. I'm not holding forever. I need to take the profits. Plus, you know, on a 1 week time frame, we can see that there's a all right, on a 1 week time frame, we can see that this right here, little order block, we know we want to go into that order block, so that means price is going to want to at least go to $240 for Zcash. So that is a really significant pullback for me. I don't really want to sit through all of that. But shout out to Zcash, because, you know, we made some good money on Zcash. Compound, we're looking at COMP USDT. That's the chart we're looking at right now, right? So y'all know I got some compound on my ledger that I did not sell. Right, so we're looking at the 1 month time frame on compound. It's been holding up on this level really nicely. I think this level may come from like the 6-month time frame. Let's see. I don't know where this level is coming from. I wish, and this is why you have to always label out your boxes. Oh, never mind. I found it, you guys. So this is the monthly wick. So I need to label this. All right, so this is the monthly wick that I labeled out. So far, price is holding up, but you know, looking like it's getting really weak right there. I will measure this wick out, and the last line of defenses for compound would be to measure out this wick, and we need to see the midpoint or this quarter level hold up, but it's not looking good for compound right now. You know, I need to be selling the rest of my compound, but I'm going to just hold off for a little while because I don't own that much. You know, I'm still looking to get into some crypto projects. I just need to really keep my eye out on, you know, what's what. See what hype is doing. Oh, what do you know? I told people hype was coming down, y'all. Nobody wanted to believe me. I told people hype was coming down. Nobody wanted to believe me. Let me see. I made the thumbnail and everything, so I know I got the proof. I said 50 is going from $55 to $14. That's what I told everybody 4 months ago. Right? You can go look at that video. I posted it 4 months ago, y'all. Crazy work, man. He be knowing something. You know, he be knowing something. So we might end up buying into hype sooner or later. But we want to see what it's going to do within these coming months, right? We're looking at the monthly chart right now. I want to see how this monthly candle is going to close. But I would like to start buying anywhere between, you know, $20 and below is where I would like to start buying some hype coin. Right? Yeah, so it might be a good time to buy, man. That's why y'all got to watch my videos. I literally called this out 4 months ago. You know, not trying to flex, but I'm just trying to help y'all out. You know, so we all can be eating and winning together. Right? This is why I tell y'all to watch this stuff on a higher time frame. So let's drop down into the 1 week chart on hype. Make sure we're not missing anything. I think it could even go lower. So we're going to really wait and see. The crypto market is very scary right now for me. But I told y'all when it was all the way up here at 55, do not be buying up here at 55. I tried to tell y'all. This is why you have to subscribe to the channel. Right, this is why you have to subscribe to the channel, man. Because I tried to tell y'all about hype, bro. I tried to tell y'all about hype, man. People was hyping it up. Oh, all right. Hey, I had to make myself laugh with that one. People was hyping it up, though, man. I was trying to tell y'all, man, like, hey, look, this ain't gonna work. I was trying to tell y'all, this is not going to work, man. So, all right, let's see what else we got. Filecoin. We got Filecoin. Filecoin been a disappointment. Keep telling y'all I'm not touching Filecoin until I see something that's actually being done over there. I don't even want to waste my time looking at Filecoin. But we can definitely look at some Chainlink. I told y'all Chainlink was pulling back. I told y'all this is y'all time to make some money right here. This is y'all opportunity. I know most of y'all gonna miss it because, you know, that's what y'all be doing. But we got all of this liquidity, right, on Chainlink. This is the Chainlink chart. Right, so we got all of this liquidity that we're looking at. And price is looking like it wants to go down here and sweep this liquidity, right? So I believe we're going to have an opportunity to get Chainlink at like $3.50. So I'm trying to start saving some money so I can be ready to have my limit order in, because that's what I believe is going to happen all the way down here. You know, and obviously you just got to buy the dip. You know, at least you don't have to buy the dip. Let me not say that. You don't have to do anything. Right? I don't want you to, this is not financial advice. But for me personally, I'm probably going to be buying a dip down there somewhere. Yep. So we're just being patient with Chainlink. I think Ecomi Coin is going to bounce back. Right. This is from the weekly time frame. I'm looking at this gap right now on Ecomi Coin. You know, we swept some liquidity on the higher time frames. Made a really aggressive pushback up. And then, you know, we swept this liquidity right here at a very sharp rejection. Now I want to see if we can possibly start building up some support at these levels for Ecomi Coin. Right, and Ecomi Coin symbol is OMI USDT. All right, that is going to be the Ecomi Coin symbol right there for you guys. If you guys want to do some research into this project. This is the NFT project. This is like a virtual reality type of play, so I like this for crypto. This project has been getting hammered over the years, just losing market cap, right? Just losing market cap. But if you guys have been learning anything on this live stream, you should know that liquidity trumps everything, right? So we got all of these equal highs in here, right? And then we got more equal highs all the way back here, right? So we can look at this as liquidity, right? We can look at all of that as liquidity right there. So me personally, I'm definitely looking to get in on this trade because, you know, if we do the risk to reward on this economy trade, right? Let's just say it looks something like this. And you're just getting in about right now, right? You started to accumulate right there. I won't even put my stop loss right below there, but let's say you got a stop loss, something like that. Random stop loss, right? Obviously, if you're buying, you're just going to be buying it. I'm not going to be day trading it. But just for hypothetical purposes, if you're targeting even just those all-time highs up there, that's a 40-to-1 risk to reward ratio. Right? That's a 40-to-1 risk to reward ratio, meaning if you had just $100 on Ecomi and it, went all the way back up there to its all-time highs, that $100 could make you $4,000. It may be worth it, is all I'm saying, to start getting in at the lows, It may be worth it to start getting in at the lows and thinking long term. All right, let me know what y'all think down in the comments below. Are these even projects that y'all know about? Have y'all ever heard of any of these projects? If y'all have any questions, let me know. If y'all have any charts that y'all want me to look at, also let me know as well. See, we already looked at Zcash, Pepe. Pepe down bad too. I'm not gonna really look at Pepe too much. Dang, that was a massive gap up right there. Massive gap up. Some of these charts look pretty scary. Like Palatar, I would be scared I would be taking some profits up there if I was in from the lows. Nvidia. Their protocol is coming down to some really good prices. I think their protocols is definitely a project I'm going to be keeping my eye on. You know, I've been waiting for it to get to this orange box for a long time. So now that it's finally there, I'm going to be waiting. And, you know, definitely not going to be scared to buy. If I was willing to buy all the way up here at $3, I know I'm going to be buying some more at $1.50. So definitely keep my eye on their protocol. Look at some Solana. Solana is a tricky one for me. Right, this is the 1 week time frame. Right, and I'm pretty much looking for this orange box, looking for price to come down into this orange box, which is at pretty much $85 or below for Solana. Right, we got liquidity right there. We got all of these swing lows in here that I think price is going to want to go down there and sweep some of that price out. And then when Solana comes down, I'm going to be looking to buy for the long term. So maybe the trade will look something like this. Right, that's a 4-to-1 risk to reward ratio. So that's not really giving you that much risk to reward. See, I'm just looking at the rest of my watch list over. Making sure we're not missing nothing. Man, Porsche fell off a cliff right there. I think I might have to buy me some Porsche stock. This looks like it might be a good price. Yeah, I think I might have to buy me some Porsche stock. You know, that's what it's looking like. This is a really good area. Let me look at the 1 month chart. Okay, we got some equal lows on the Porsche chart right here. Right. I'm going to put these in a little bit of a bubble so y'all can see it a little bit better, but we got some equal lows down here. for Porsche. So I would like for Porsche to take out those equal lows down there. And then maybe we can get a price of $39 or below for Porsche. Start accumulating. One day, if we ever hit the all-time high again, that's a nice little 3-to-1 risk to reward right there. That's beautiful. But we need to see some type of like market structure shift, at least on the daily or the weekly time frame. But you know, we might have to get in, have an early position. But regardless, we know we want to, you know, be patient. But I'm definitely going to make a memo of that because Porsche is looking really good right now. Origin Trail. I remember my girlfriend was telling me about Origin Trail. I really still don't know much about it, but I have been looking at the charts. We're just cycling through. Coca-Cola, still at a high price. WorldCoin. I think that might have been one of Donald Trump's projects or something tied to him. Intel Corporation. Uranium flying through the moon. Pretty much all of the metals are flying through the roof right now. You have Verizon. I want to look at Verizon on a daily chart. I mean, on a monthly chart. Yeah, we got a little gap right here on the monthly with Verizon. I mean, not a gap, but a little order block. This red candle right here. Right, that's going to be order block, but I definitely think price is going to blow through this red candle. That's why I didn't have it boxed up on my chart to begin with, because you know price have already reacted there once. So now it's going to, the next time it come back down, it's going to be looking to sweep this liquidity and dig a little bit deeper into these lows. So if I was in Verizon, I wouldn't want to be holding that bag right there either. General Motors, it looks like it's going up really a lot. Jeez, I wonder what they got going on. This is a lot right now. For General Motors, BYD. BYD chart is flying as well. Apple. Very, very bullish chart for Apple. That's all I got on my watch list, you guys. That is all I got on the watch list for today. We can check back in with our chart before we go, see what happened during the London session, since it's now almost 5 a.m. Just for learning purposes, you know, we can see what happened during our session. Oh, well, it looked like it just kept going down. All right, looked like it just kept going down. So it never gave us that buy opportunity that we thought we could get with this liquidity. So that's why if you get one trade idea in the London session, you have to learn how to be done, you guys. So I am going to go get some rest, man, because I don't know if I have work today or not, but either way it go, you know, I'm taking a couple online classes this year, y'all. You know, I got a lot on my schedule. I'm managing like so many prop firm accounts. You know, I'm going to school. I'm a full-time. I work full-time as well. So that's why I just be needing y'all to hit that like button whenever y'all drop in. Show some love to the channel, man. You know, y'all know I always appreciate y'all popping in and showing y'all love. So with that being said, man, I'm going to go ahead and get up out of here and get some sleep. Happy Martin Luther King Day. Happy Black History Month. I hope everybody have a good trading month, a good trading week. Just remember to stay patient and always manage your risk properly, you guys. You have to learn how to manage that risk if you ever want to be great and have long-term consistent success with trading, you guys. So I hope y'all enjoyed this stream.